I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market soared this week as investors looked past everything, fearing the worst thing that could happen to them would be that they missed the next surge to the upside, to who knows where. Monday saw the market gap up right out of the gate as China pumps up the economy, putting in $150 billion in stimulus, banning short sales, and cutting interest rates. And they told brokers to inform their clients that the virus is temporary. Of course, we saw the numbers get worse as the weeks went on, but the markets didn't really care about that. China blamed the spreading panic on the U.S., and truth be told, that China is actually hiding the truth, and they are doing whatever they can to censor free speech in that country and social media to make sure that those people that could be telling truths about how bad the coronavirus is, well, they are simply stopped. Tuesday saw the market shake off some bad earnings from Google. Google gapped down on a revenue miss. Investors seemed thrilled to see what happened in the Iowa caucus. It was a true debacle, and they seem to be positive on the fact that the odds may be increasing that they get to have 4 more years of the same investment environment. Also, Tesla would put on an unbelievable show as talk about fear of missing out or short squeeze. The stock was really acting like there was some forced buy-in going from people that were short as it explodes, tick after tick, goes all the way up to 969 and then falls all the way back down to about 720. There was actually about a 5-minute period where it fell 107 points. It was just unbelievable, and I've traded some of those options, and it was absolutely wild. So Tesla really was the show on Tuesday. Wednesday, stocks looked weaker early on, but then moved up very sharply overnight on a report that a medical team in Wuhan, China, where all of this started, had success against the coronavirus in a petri dish. Of course, that might take a couple of years to develop, but that doesn't matter because investors want to buy on every possible piece of news, and the market surged overnight on that news. Thursday, China cut tariffs that they had on the U.S. on $75 billion in goods as they want to help the economy, and that also helped the stock market here. And Friday, some mild profit-taking came in. It barely is scratching the huge gains that we have this week. Job growth came out very strong, much stronger than anticipated, and ADP set the trend for that on Wednesday in the private sector. And some odd trading as hourly earnings really start to move up, and those numbers, well, not really scaring the bond market because the bond market gains a full point. That might be about the news about the coronavirus, where the number of cases exploding and the number of deaths moving up along with it, 638 deaths, of which 4 of them are on that stranded cruise ship of where there are many people that have contracted the coronavirus. 4 people now sadly having died. So none of that news, of course, stops the stock market, which really is in a very, very strong mode right now. And investors really strongly have the ability to look beyond all of the negative news that we have here, and pushing stocks up to very surprising valuations. It does remind me, of course, of the year 2000 and then way back to 1987. 1987, yes, I was trading the markets then. I started trading in 1974. Those years do come to mind in here. And when I mention those years, or 1987, people may be laughing. Oh, yeah, sure, here's another alarmist out there, another doomsayer talking about markets that crashed or time periods that bull markets stopped. And yeah, everybody's ignoring everything now. Eventually, the coronavirus will run its course. It'll burn itself out, and hopefully not in a severe pandemic. But investors believe that, the central banks have the ability to print money and stimulate forever, and that will never burn itself out. You just buy every dip aggressively, and this time the dip was only 3.5% to the downside, though there actually may be more coming. Going back to that brief thought about 1987, there's something in there that I think is worth mentioning, and I will soon do a video explaining this, but there's something very important. 1987, of course, was a wild surge to the upside at the end. I mean, you really wouldn't think that anything could last that long or go that far. That was the last upward leg in 1987 was about 11 months long, and it got up about 47% from its previous low. Little corrective low in 1987, and then surged up. That was actually 1986, and surged up 11 months, 47% off that low before it ran out of gas and collapsed. So just a little tidbit of where we are right now. Well, we're now about 13 months off of our December 18 low. 13 months, that's longer than 1987. 1987, 47% up off that low. We are now, in this market, 43% off that low. So you may laugh that it's an extreme or that it's I'm being an alarmist talking about things like that, but those are the realities of the numbers. Our analysis was for the S&P 500 to move down into late February, early March, and we were looking for 5-6%. We thought maybe 175 points on the downside. We did get 125 points, and to us that seems, incomplete right now. But the market has improved for sure, and the buyers are still out there. So instead of seeing maybe a big downside that we expected now or bigger, we kind of see more of what looks like a range forming in here, and what would be a top forming that may put the market in a lot of risk once that top is formed. Right now, we see some upside potential that's very minimal. We'll say 3362 on the S&P 500 is the top of the kind of range that we're looking at here. And maybe the bottom is at around 4% down, 3220. That looks like some support right now. I'll show you some of those numbers as we get into the short-term view. But we think that just, in these couple months of chop and top forming, it's going to set up something that could set up a very big decline. And we think that is coming. Now, ultimately, we thought that the market would move down very sharply into summer. And now that we see the way this market is acting right now, and we look back at the craziness of the length of this and extent of this on the upside, we think that that move down in the summer could be pretty severe. Then again, that might get helped by the prospects of a socialist president coming online. I know that seems bizarre, but so did 1987. Stocks surged this week, as we said. Indexes moving up 3.5% to 5%. The bond market moves down about 1.25 points. That's not very much, as the 10-year yields move up about 7 basis points. And that yield curve just a little bit steeper. It's still basically flat, looking from the ones all the way out to the 10s. So we're really 1 month to 10s. Gold market, the safety bid got lost in there. We thought it would fail around 1,600, and it did. It was down about $23 for the week. Dollar 5 for 5 on the upside. Quite a run of about 1.4% this week. And that was just an exceptionally big move. we have a sense that there is a little bit more on the upside in here, but maybe not that much all for the dollar. And it's been a safety bid for sure, as the rest of the world is more threatened by coronavirus than the United States is right now. So I think that's really what's going on. Maybe just a little more for the dollar on the upside in here. Oil loses about 70 cents. It failed from an attempted rebound, and that's not likely to be able to do a lot better for a while. It made a low below 50, 49.30, which we had warned was a pretty good possibility. So the oil market pretty weak, and it certainly has supply-demand issues. Follow us on Twitter at askSlim and become a YouTube subscriber. Now, don't miss out on all of the YouTubes that we're putting up there. A ton of analysis. RV, our great cycle analyst, works right with me, is doing some very good videos, and he's going to be stepping up in that. Really good analysis when you look at that. So make sure that you become a YouTube subscriber. If you like this video, then absolutely give us a thumbs up. So now, last week I talked about something that was coming up, and I want you to see this. This is the Slimulator Momentum Tracker for investors and long-term swing traders. And I'm going to preview this for you. And I also want you to see that we're coming into a preview week. Just an amazing week, actually 2 weeks that we have coming up here, where you're going to be able to preview and test our Momentum Beta Tracker. All you have to do is be a free member, and you're going to get a tremendous amount in here. The Slimulator Momentum Tracker, I'll show you that in a second, for 2 weeks, and free previews of really unbelievable content that we put out. You're going to be able to test that Momentum Tracker, and that's really for longer term holders. You'll also get a special free preview of our stock index report daily. That's a report that's put out every day by Matt, and he does a fantastic job on that. And he also puts out a stock index report live stream. So this is live charts on the 3 major indexes, and I'll show you that in a second also. And then you'll get also a free preview of the stock index report weekly, and the free preview of the weekly the Spider, SPY, that's spelled incorrectly, ETF review. So that's some just great free information you're going to get while we're in this Momentum Tracker Beta and free preview week. You just have to become an askSlim member, a free member, and there is no credit card necessary. Let's take a quick look as we look at the Slimulator Momentum Tracker. And I'll give you a very quick overview of what this is. So you can see what I have in here is a single symbol in here of IBM. So the stock is IBM, and our directional bias is very bullish. And our investor outlook for the next 3 months says strong conditions suggest minor declines and higher prices coming. So in other words, that's a buy the dip mode. The long-term and intermediate and short-term momentum readings are all green. So when you get all 3 across all green, you get just a fantastically strong picture of a stock. Now you can, switch this and put in other stocks. We'll just go to like Apple, and you can see Apple is the same thing. And if you go to Exxon, you can see Exxon, well, that's all negative. Exxon Corporation, very bearish. And the 3-month outlook is weak negative conditions suggest failed rallies and lower prices. Now this has been around for a while, and we're going to put a new feature in here. We're going to be able to check the dates on when these things change, and we'll be able to look at the charts and say, okay, what happened after that? So this is just some unbelievable information. In addition to that, now you see we're in a single symbol mode right here. If I go in here, look at these canned lists that are in here that you can just look at the different groups, and you can also just create your own watch list also. So if I just go to my watch list right here, these are just some symbols that I put in there. And you will note that you have a choice of looking at them all, or let's say I just want to look at Apple. I just click on this I right over here, and Apple comes, and if I click back on that, it brings me to my whole portfolio that I put in here, and you can see in here the different rankings. Now, if I want to go look at the S&P 500, we'll just look at one more list in here and see what this looks like. So now I select the S&P 500, and did I select that? Did it load up? There we go. So it'll take a second for that to load up because, of course, there is 500 stocks in the S&P 500. I knew that. So this, you can see, is fantastic. What this tells you is there are 45 stocks that have a directional bias that's positive, 38 neutral, and 17 in the intermediate category. It defaults to intermediate. So if I go to long term for investors, 69% of the S&P 500 are still in very strong upward conditions. In other words, very bullish. 15% neutral, 16% bearish. That shows you still a very, very strong condition in the stock market. So you can see we have the whole S&P 500 in here. You can actually scan also in here by just simply clicking on here. So if I want to see all of the long-term positives, let's say, this updates about every 15-20 seconds. So here's the long-term negatives, there's the long-term positives. If I want to look at the intermediate term, there's the negatives and there's the positives, just by clicking those, and you can see. And this is just fantastic information. So you get the dates of the last reading right in here, and just great, just unbelievable sorting capability. If I want to see which of the short terms or what the ratio is for short term, you can see that now the short terms are really starting to overtake the in the negative compared to what the long terms are. So the short term conditions are weakening. Great stuff. This is just an unbelievable, I don't know if there's another app out there like this that gives you the ability to see the momentum conditions. This program with our own algorithms that we wrote and available to you. All you have to do is become a free member to preview this, and then after the free membership is over with, it's going to be a level 1 subscription. In other words, all you have to do is pay a very minimal price to get this on a monthly basis, and you will have all this information at your fingertips. So sign up now for free, and then we'll just notify you when you can sign up for moving forward for becoming a subscriber. Now, I told you there was other free things coming in this preview week. For those, this of course is for long-term traders. For short-term, this is our live feed of our 3 indexes that we put out every single day that shows you unbelievable information. This is the S&P 500, the NASDAQ, and the Russell. What we give you is supports, resistance, acceleration zones, and we have in here our just unbelievable reversal scout that gives you so much information. You could see in here there was a rally in the NASDAQ right in here, right? And you could see the reversal scout turning up, but at the same time, look at what the Russell was doing as it moved down through the acceleration zone right over there. So that's how you catch the bigger trades. That's how you know which ones to buy and which ones to short. There is, again, hardly anything else like this. You will have such a good market feel when you use this. And again, this is free right now for the next couple of weeks because you've signed up for the free preview. So please do become an askSlim free member to be able to see that. That's just incredible. So what we're offering you, of course, are all of these previews and for you to test that momentum tracker. And all you have to do is join us for that beta test the next 2 weeks. Go to askSlim.com, sign up for a free account, see those free previews, beta test the momentum tracker, send us your feedback because we're improving this every single day, working on that. And of course, no credit card necessary because it's all free and there'll be no automatic renewals. If you sign up for free, it's all about you experiencing it and then deciding if you want to sign up for the incredibly low price that we're going to bring you on a monthly basis. I'm going to surprise you with that. All you have to do is sign up. The icons will appear in your dashboard, and you will see how to click right through there. And if you have any questions, just write Matt at askSlim.com. Become an askSlim free member. All right, so now we're going to get into the best and worst stocks for the week as we switch over to the charts. That's not the charts. Let's get rid of that. And we'll get somewhere in here there are charts, I promise you. And we'll get rid of that. And there's the charts. Okay, so for this week, the best stock on the upside, gaining about 23%, was Biogen. That stock gets a big boost. Earnings beat. They had a favorable drug patent ruling that really also helped it. And it got crazy. You know, we talk a lot about stock being overbought when it gets a long way from the 34 moving average, and you can see what it did right there. That's the 34-week moving average. When it gets a long way on the downside, eventually either the average catches up or it moves back to the upside. And this got very, very overbought. But this is, you know, you can look in here. This is the minor cycle right there. Of course, I want to introduce you to cycle analysis. You can see the big dominant cycle here. This is a drawing tool, the cycle bracket, and there are 3 minor cycles within the major cycle. The first minor cycle bottomed here, and it exploded to the upside on that earnings report. Regeneron up 13% in here, and that one also early in an upside move, and we think you buy pullbacks in that one also. Biogen analysts are loving it, and there are many, many upgrades going on now in this stock. So if it pulls back a little bit in here, I think it is a buy. Twitter moves to the upside. Twitter's a stock that we loved for a while and then hated for a while, and as it had a breakdown. Now it built this kind of basing cycle right in here and then exploded right up there. Twitter up 14% on the week. Their earnings missed, but their user growth was really strong, and analysts are mostly positive on this. There are some analysts that downgraded this week, and you can see this rally as it got up here to that 61.8%. Now, our analysis is based on the core parts of our analysis are cycle analysis, momentum analysis, and analysis of support and resistance. And then we add in candlesticks. You can see the sell signal right over here that made the top, and then it broke down very significantly. So what we have now is an upward turn in momentum that occurred right over here, and in this modest correction, we didn't even lose the momentum to the downside. So here we are, the first week of this rally, moving up. The probability of peaking in the first week is less than 10%. What that says to me is that we're likely to see a move up past 38, past 39, and maybe even up to this level we're projecting, up around 42. So we think that the stock is a buy right now for aggressive traders and could give you further upside in there. Even though the earnings missed, that better growth, that better user growth is appealing to investors. Alcoa is an interesting one in here. It gains 11% on the week. They sold they had an asset sale, got about $150 million on that. Now this has colored phasing in there, and you can see that each of these cycles have green phases and red phases, or green and yellow and red. And what happens is that once you get to the bottom of a cycle, even if it's red, we start to look for bottoms to form in there, and we think that that happened in here. It was building a base, but the base broke down. So now we just expect that this move to the upside in here of 11% is the beginning of a modest rally. We haven't put in the resistance points in here or targets, but it's generally, about half the distance between that 23 and 13. So that would put it up to about 18 and a half would be our target up here, and we could see a reasonably decent period in there for it to get a rally if the stock market holds up, of course, which we think it will for a brief period of time. So Alcoa making a bottom in there, and that asset sales seem to help. Morgan Stanley lowered its targets on it, and we're raising our targets, at least right now, where we see at least $18 on the stock, $2.50, $3 move, which is, approaching 20%, maybe 18% on the upside for a couple months. Wouldn't be so bad. Tesla, TSLA, that was the show. Look at that candlestick. I mean, that is incredible. The upward projection, the only one we could get possibly, is up here at 1076. And that's just a crazy one up there. I guess anything could happen when you look at a stock like this. You have this big shooting star, which really says that's probably the high at 969. That was a panic buy. Shorts, I'm sure, were getting forced to cover. There must have been accounts that were sizable that brokerage houses took over and just bought at any price because they were desperate to stop the bleeding. And that's what happens. And then you get that big upward move. Now, Tesla, only gains 10% on the week after it was up so much more. It's over 200 points off of its high. And as I said, fell 100 points in 5 minutes. Now I think it's a range that it's going to trade in. So if you're an aggressive trader, well, how do you establish the range? Well, I'm going to go to the daily chart for a second, which I normally don't do in here for you to see. And there's the Tesla daily chart. And you can see that long-legged doji, that abandoned baby. I mean, that really is a candlestick that says it's not going to get up there again for a long period of time. And when I look at the cycle analysis in here, it really says that it's going to be in this choppy area in here out until towards the end of February, and then have a better chance to be moving up again. So if this is for the next few weeks, we can see in here what we've established a minor resistance sell zone. In the middle of that sell zone is at about 827, about 90 points from where it is now. The support areas are down near the slim ribbon, which is still giving you this upward bullish momentum. So the center of it and this bottom area right over here is at about 700, 695-ish or something like that. And that really looks like the range to us. And we think it'll be trading in that range for this next couple of weeks. What that says to us is that, well, if you dare, you could sell strangles in this thing. And of course, we don't ever recommend anything like that. It's only for people that understand that style. Or it means that you can wait and make trades when it and counter trend trades when it gets into these areas. So that's the range area that we established here in Tesla. And if you like that, you'll be able to potentially get some decent entries when you look at that. You got to give this thing a little bit of room. Only a 10% gain on the week for Tesla. And you can see as we look at weekly and daily cycle patterns in there. Now, if we get that rally as we suggested into March, that probably won't last, and it'll come back down here into late March right over there. So this cycle projects that way, and we really could see it pretty range bound in here in that wide range of $100+ for Tesla. Microsoft is the last one we're looking at that was on the upside in here. And that stock gets a very big gain on the week. You see our big warning up on top there? Extreme overbought condition, 8.5% up. What excited investors in here, again, is that it is going into a partnership to develop 5G. This is crazy. Now, we always talk about, when something is overbought or oversold, we want to justify why we say that. And if you look at here, you can see that, well, whenever the stock gets very, very far away from these moving averages in here, it comes back down towards them. So here's your 34-week moving average. Here's your 13-week moving average. And every one of these cycles gets back down to the 13 or back through the 34-week. So this one coming up right over here, this is your target over here, about 166. We could see the stock losing 18 points here in the next 5-6 weeks. This is, in our opinion, very excessive, extreme overbought, and just because they're joining in a team to develop 5G doesn't mean that it should do that well. It has maybe a little bit more upside in there. We couldn't argue if it got to 190 briefly, but truth be told, we can see it moving down much, much closer into this support area buy zone in here. This is 166. This highest support level is 173. And here is just no time to be adding to long positions in Microsoft. So that is the best for the week. Now we're going to take a look at the worst for the week. Now, while the best of the week, I could have had many, many stocks that I looked at. I picked out 5 that I thought were very important to look at. Could have been the downside just wasn't near as bad this week, and it wouldn't be on a week that had 3.5 to 5% gains in the major indexes. Just a crazy strong week, and I think it's a running out of gas here. But we'll talk more about that in a moment. Let's take a look as we switch over now and look at TTWO. This is Take Two, and this stock you can see has got problems. Look at the double top that formed in there. Now you can see the cyclical patterns, in other words, the rises and falls, and you can see that they are pretty equal lengths in these different cycles. So you have a low here and a low here and a low here and a low due here in about a month. So what's the chances of this being the worst of it? Well, not very good. And if you look right over here, we have a cycle breakdown. So in other words, it gets below that cycle low right over here, and that confirms it's likely to fall for 4 or 5 more weeks in here. We could actually make a reasonable target of 103, another 10 points. So if that bounced in here, then it would be, for the next week, you got to bounce on the upside. You're getting a high probability short sale in there for active traders. That's how we look at that, and it says to us, sell this stock if it bounces. So 13% down on the week, earnings a big miss, analysts downgrading the stock. EA and Electronic Arts and Activision, ATVI, they were up on the week. But they're both coming up to resistance, and then EA is giving a sell warning right now. So I'm saying beware on this group. You can't just get Take Two moving down and EA and Activision moving strongly to the upside. Well, there are unique situations, but usually we have group action. We call that the principle of synchronicity. And my guess is that we're going to see the whole group begin to falter in there. Ford Motors, Arvi did some great analysis on this. You can check our blog on that. And, whoops, there we go. And we have a cycle breakdown in there also. You can see that right there. That points to a decline out into April, and probably going to see it below $8. It's a big miss on earnings, analysts downgrading that, and we have a negative situation. You see this low right over here on this cycle and this low here. This is negatively configured. When that happens, the probabilities are high that the next rally will fail in resistance. I didn't put the resistance in there, but it's about halfway up, which you could see, and then begin coming down again. We have momentum turning down in here, and this stock in bad shape. We'll look for Ford Motors to go lower. One of the stocks that investors love to hide out in is Kellogg. It's in that consumer category. And this is not a good pattern either. So interestingly, it got far away from that 34-week moving average and then came back right to it and found some support there, and also right here at the 78.6% fib. So that's a reasonable place for it to try to bounce, 7% down on the week. Earnings, adjusted earnings beat, but guidance was really weak, and we see this stock continuing to move down into April. We're going to look for it to test that cycle low right over there, moving down towards the $60 number. So investors who like to hide out in this one found out that all hiding places are not all that safe. Next stock we're going to look at is STK, which is Seagate. Seagate in here, STX, STX. There it is. How does that look to you? Well, first of all, you can look at this chart and get just so much information. It's incredible. There is so much analysis here that would be helpful to you for you to understand. Well, this is one of the prettiest charts. Some people look at our charts and call them messy or dirty because we've got stuff all over them. But this is just loaded with important information. Let me help you with that. You can see in here that what happened was that this was a head and this was a right shoulder. This is a left shoulder you can't see on the chart here. So this cycle completed the head, this cycle completed the head and shoulders. You got a neckline breakdown, and the target was right here. Look at that, fantastic thing right there. Then it rebounds. You can see the intermediate resistance levels in here, and it fails. But it started putting on favorable patterns. This is an upward cycle. You can see that. This is an upward cycle. You can see that. It hits the intermediate buy zone and pops. This cycle forms this target zone and it hits it. This cycle here forms this target zone and it hits it. And what happens now? Well, it rolls over, momentum turns negative, and of course it comes down to the 34-week moving average. And that's the 78.6%, but it's not done. Look at the length of time left to decline. This goes out till the 3rd or 4th week of March, so that tells you 5 or 6 or 7 weeks potentially on the downside. It's a reasonable target right over here at $50, so this decline is not done. And if you get a bounce, it's a short sale, and this looks like a very important top. Because when you decline to the 78.6% or worse, the next rally hits resistance and then rolls over to lower lows. So this very well could be setting up a pretty major top in there in Seagate technology. So, of course, this in the storage category and peripherals, and you got to wonder if this, look at what's going on in hardware is significant. It could be a tell for the rest of the group, though there is some question about whether or not this is because of the effect of the coronavirus and where they're susceptible in different countries to a slowdown. There's a company out called Summit Insights that has ranked this now a sell, and I'm going to give it to 50 or lower in here in this next month or month and a half for Seagate. And the last stock we're going to look at, and also at risk of getting hurt by the coronavirus, is Yum. Now again, this is a stock, this is a chart that gives you a wealth of information when you look at it. You see in here what happened was you started to form positive patterns. That's those upward arrows as each of these cycles made higher bottoms and higher highs. Beautiful. And this one did the same thing, a higher high. It gave you that engulfing sell after hitting the target zone, and then came down and broke through the 34-week and below that low. What that tells you is that you're entering into a declining period for the stock, and that the next rally would likely fail in a resistant sell zone, and you can see that. Hits the sell zone, gives you another engulfing, and now this stock moving down, likely to continue down into April. Now, earnings, they missed. Analysts downgrading the stock. The virus, well, they have huge exposure in China, but Yum is in denial. They're saying they don't see it affecting them very much. Well, I think they're going to be wrong, and I think that you're going to see things change. And we're going to give this stock 92 as a target right now, or worse. And there's even a head and shoulders top in here that's forming that, well, it's kind of a small left shoulder that you can see, but overall, we think that is a major top, and there is risk in this stock to the downside. That is the best and the worst stocks for the week. My hope always is that you learn a ton from that analysis, and you do decide that you can adopt this style of analysis. Of course, if you want to learn how to do this analysis, we have a workshop for you. It's called our Cycle Analysis Workshop, and go look it up. There's some information there on our website, and I think you will learn a ton from that. So now we move into our short-term view, 5 major markets for the coming week. This is our short-term view, so we look at daily charts instead of looking at the weekly charts. And we look at light crude, gold, the dollar, the bond market, and the stock indexes, mostly looking at the S&P 500. We rank ourselves based on how we, what are some of the evidence analysis is for 1 to 3 week period. And we look at momentum, we look at price levels, we look at what we thought the net change would be, and that's how we rank ourselves. We got light crude, the gold market, and the bond market pretty spot on. They were good. We nailed the low in the bonds. Well, it got 1 tick lower than what we projected to in the bonds. The dollar, we get partial credit in that because it was a little stronger. It moved up past the level. We thought it would rally and come down, but it hasn't come down yet. It has remained strong. And the S&P 500, a total whiff. We missed that one. And we did a video yesterday in stock sectors looking at 23 different ETFs as I drilled down in there working hard to understand the market better. And I think there's some great information in there, so I want you to go look at that video in our stocks sectors section. So you have to be level 2, 3, or 4 or be one of our partner sites to be able to watch that video. All right, so now we're going to get into this short-term view, and we're going to leave these weekly charts and go over to the daily charts, and we'll start out with /CL. This is light crude. And what we were looking for in light crude was for it to, kind of waffle and move down, try to bounce and fail. We thought it would get sub 50 when it was right over here. Look at the momentum, still negative. Look at the projection oscillator. When you see the projection oscillator say sell here, that's because what it's giving you is a confirmation of negative momentum. What it says is it's confirming the negative momentum mode, which says that this rally in here is likely to fail and that we would be moving down again. So that's how we have our projections. We think we could get some mild chop rally up here, maybe up to this area 53.40, so small upward, and then fail again. Momentum, as I said, still down. Projection oscillator saying it's going to continue it to the downside. And the sum of the evidence in here still says that we're going to get declines, and on the intermediates, it says into the third week of February, potentially. And so we still think we're in a sell bounce mode in here and likely to see it sub 50 by some number of dollars potentially in this next few weeks that we're looking at right in here. So not looking for a whole lot. Rallies fail and momentum still quite negative. So that's a look at light crude. The gold market, we were really suspicious last week. We put out the caution flag saying that we thought a move to 1600 would fail and would begin to move down. So a lot of stuff on this chart that we're looking at, just so you understand it. This big silver dashed line is silver. So what I do is I superimpose silver over the gold chart, and the gold chart is the blue one right in here, so that I could see how they're trading together. And the big dominant gold one is right over here, and you could see coming down. So you have the dominant cycle coming down here, you have the regular minor gold cycle coming down here, the silver cycle coming down here, and all of that made me suspicious that we were not going to be able to hold the upside in there. And tested 1600 almost exactly, which is what our number was. And now catch this. This is a bear flag that's forming in here right now. So we're going to call for this bounce that it's in right now to fail again. Now we're gonna look for a down week in here. This area right over here, that's 1538. That's an important number. We really don't want to see that break. I wouldn't mind to see it just break down in here, get down to some 1550 or so, settle in there, and then get ready for this phase over here that could be more positive. But even when I look at the intermediate patterns, it's not really ready for anything big on the upside. Some of the evidence says that 1600 was a double top, and that there's a weekly engulfing pattern, and the indications are that there's an intermediate top, and that we're going to be in a choppy corrective period out into May. So what I think in here is that, if it does break that level of 1538, that will be the confirmation of the corrective period we're in. Now, I think we're going to see much higher prices later in the year, but I'm looking way too far out as far as that goes. So right now, the sum of the evidence says that we've seen a peak, and we're more likely to see downside in here than upside, and we're going to look for that. Now, momentum still strong, but starting to weaken, as you can see right in here. So it's flattening out, but still on the upside. So that's going to hold anything from really being a big decline in there. The dollar sign DXY, that is, wow, look at that chart. This is what we're looking at now. It really exploded to the upside. So there's some resistance up here on the weekly chart as you approach 99, 98, 99 right there. And it moved through this cycle peak resistance right there today. So this is a much improved pattern when we look at this. We were not sure about whether or not we were getting a breakdown in the dollar market. It seemed really crazy early to get that based on when this low occurred, this low on the intermediate charts. So now it's proving that that's not the case, and it's got upside legs. And you can see the directional component here in this upward channel. Momentum strong in here. And now if it gets a pullback, this is now your short-term support and buy zone. And that's what we're looking for. We're going to look for the dollar to roll over in here and to move down towards that support buy zone, getting down to about, this is 98.06 right over here. This is 98.20. And overall, we could see a short-term range that really is in the area of, maybe that high of 99, but I doubt it. Probably stalling somewhere right in here at maybe 98, where it is, close to where it is right now. 98.73 looks like a pretty good spot, and then getting support down over here at around 98.18, 98.15. That's kind of what we see in here. So there's, that resistance zone up here is probably going to stop it, and then it's probably going to come down in here. We're going to call this to roll over, probably get a down week in here in this tight range that we're looking at. The sum of the evidence does show that intermediate patterns are better, and momentum has begun to move up. There is a safety bid in here, and that's overcoming the low interest rates. Generally, when you have low interest rates or declining interest rates, you would have a condition where the dollar moves down. But the interest rates are declining today, and the dollar is moving up. So there is certainly a safety bid going on right now in here. And as the stock market now is moving lower, it's down 23 points right now in the S&Ps. The bid seems pretty solid in here and the bond market. So that's kind of unusual. We're going to look for this to find some resistance in the next few days and then begin to move to the downside. So now let's look at that bond market. We said we nailed the low in bonds, and I'll show you that. We said that the low was likely to come at support right over here at 160.16. It traded to 160.15 and now is moving up again. This low in here looks premature to me. You can see the evening star pattern right there. I'm going to guess that this will move down one more time, but really this is a buy zone in here, and we think we're going to see the bond market moving up again. Intermediate patterns also show that. So momentum in here you can see is strong, moving up. Here's where your momentum turned positive here, and look what it brought you. Here you have the buy right over there, which is confirming the upside momentum, and this is a pretty strong structure. So when you look at that, is really suggestive that we had a minor correction. It might have a few more days in here and then move up again. If it dipped here in the next few days, I think it's a screaming buying opportunity for traders, and that it is likely to continue to move back to the upside. Pull back one more time, I'm going to say buy it. And this corrective period is either has ended and we've seen the worst of it, or it will end very soon and we'll see higher prices again. And that might be what relates to the stock market starting to give up some of these gains. So we'll see. Let's talk about the stock market, which I said earlier that our analysis was not great in here. I think I used the word we whiffed. Well, what I had looked for was this decline to go for a couple more days and then get a rebound. Well, it was stronger. It bottomed sooner. So you can see the note that we have in here to our subscribers that this cycle has moved back to 20 days. It was 22 days. It keeps moving back and forth, and it did catch us by surprise. Whereas we thought it would come down further in here, maybe get down to 31.50, and then move up and fail and move down again. Well, the pattern doesn't change. However, what did change is the magnitude of the advance, and that the momentum has now slipped back to positive. That changes things in that the intermediate patterns are still suggestive of a decline out here until late February, but it's likely to be more range bound in the range that's developing in here than it is to be the big decline down to that 3150 area. So right now our projections here to the end of February, beginning of March, are to about 3215 right over there on the downside. And the upside resistance is just really powerful right in here. It got really flew to the upside, but here you have around 33.52. This bottom of this is 33.63. So that's a really pretty powerful resistance. You've got this evening star forming here if you hold on to that. And it would, say to us that there's not a lot more upside. But still, you can see that we have this range that I think is developing, and the corrective period out over here looks to be in the last 2 weeks of February, where we get back into a period of risk. So we might, since we developed a better momentum picture here, we might only pull back a little bit here, try to get another rally out here, and then accelerate back to the downside over there. I talked in the beginning of the show about a scenario from 1987 and how extended we are right now. I'm going to bring a bigger picture about that down the road for our members, but I don't think this decline is it, to tell you the truth. I just think that this is the end of a intermediate correction that will bring you down over here with this minor correction or daily correction, and that we'll get another rally period out over there and then set the hook on the bulls for a much bigger decline into late summer. So this is just the beginning of this top development going on in this choppy period, and we'll call the next week basically a chop, come down, come back up. We're going to look for that area up 33.52 to 62 for it to stall and not give a whole lot of downside in here. Some of the evidence just said the market has strengthened, but it's at resistance and there is minimal upside left. I give it a 0.5% to 1% potential on the upside, with about 4% potential on the downside for the near term. That would be 4 to 1 or greater to the downside. Now I said that over here, and I gave it odds that it would be maybe 8 to 1 on the downside when it was in making the top in here, and the decline came. We were looking for as much as 175 points. It just didn't last as long. So people that are writing me or making comments that I was wrong about that, well, I was wrong. I was especially wrong about the last week. But believe me, being wrong about a week or being wrong about a couple days off the low is not going to stop me. And I work hard to understand this every single day. So I encourage you to do the same thing. If this big rally caught you and you are wincing from that, well, just learn the lesson, whatever it may be, and start looking forward, because that's the way that you make progress. Forward looking is the way we want to be, and that's the way we're going to be here as we do our analysis, and that's what I just brought you. Choppy time coming up, I think, here, and range bound somewhere between that mid 33s and low 3200s in here for probably the next several weeks. That's it. I hope that you found this show incredibly informative. There's so much that I bring you here that we work so amazingly hard on. We have Matt working so hard all day long. We have RV working so hard all day long. And our team that we have that manages the website and our interns that work for us. There are just so many people that work hard to bring you all of this amazing information. We can keep doing this as long as you keep supporting us, and that means becoming a member. Sign up for free right now. Look at all this stuff, and when this preview ends, please do become a member at any of the levels, level 1, 2, 3, or 4, and you can write to Matt to find out about specials that we have on those, Matt at askSlim.com. That's it. I want you to be so careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been